Have you ever noticed how nature loves to repeat patterns? Look closely at a fern leaf. See how the smaller leaves look like the whole fern? That's a fractal. Fractals are complex shapes made of smaller, self-similar patterns. These patterns repeat at different scales, creating a sense of infinite detail. Zoom in or zoom out, you'll still see the same basic structure. Fractals aren't just pretty pictures, they're found everywhere in the natural world. From snowflakes to coastlines, these repeating patterns reveal a hidden order in seemingly complex systems. Believe it or not, financial markets also show fractal behavior. Just like in nature, these patterns can help us understand and navigate the complexity of the stock market. Let's take a closer look at how fractals show up in nature. Think about the branches of a tree. Each branch looks like a miniature version of the whole tree. The same pattern repeats itself, getting smaller and smaller. A coastline is another great example. A bay has smaller inlets, which in turn have even smaller bays. This self-similarity continues down to the tiniest grains of sand. Even clouds and lightning show fractal patterns. Nature's chaotic beauty is often governed by these basic mathematical principles. These examples show us that complexity can arise from simple, repeating rules. And just like in nature, these rules can help us understand financial markets. Now let's bring this idea down to earth and into the world of finance. The stock market might seem like a jumble of numbers, but beneath the surface, fractal patterns emerge. Just like the branching of a tree or the jaggedness of a coastline, stock price movements often show self-similarity. Smaller price swings within larger trends can mirror the overall direction of the market. These patterns aren't always perfect, but they can offer valuable insights into market behavior. By understanding fractals, we can start to see order in the apparent randomness of price changes. Remember, the stock market is driven by human behavior, which tends to repeat itself in predictable ways. Fractals help us to identify these recurring patterns. One of the most common ways to see fractals in finance is through candlestick charts. These charts show the opening, closing, high, and low prices of a stock over a specific time. Look for repeating patterns across different time frames. For example, a bullish engulfing pattern on a daily chart might suggest a short-term upward trend. If you spot a similar pattern on the weekly chart, it could signal a longer-term upward move. These repeating patterns can help you identify potential trading opportunities. By recognizing fractal patterns, you can gain an edge in predicting market movements. Remember, it's all about spotting self-similarity and price action. Once you start seeing the fractals, you'll start seeing the market with new eyes. Part 5. Fractals and Technical Analysis. A powerful duo. Fractals are a valuable tool for technical analysts who study historical price data to identify trading opportunities. By combining fractal analysis with other technical indicators, traders can develop stronger trading strategies. For example, you can use fractals to confirm signals from a moving average or an oscillator. If a fractal pattern aligns with a breakout from a moving average, it strengthens the signal and increases the probability of a successful trade. Fractals can also help you identify optimal entry and exit points for your trades. By identifying key support and resistance levels based on fractal patterns, you can minimize your risk and maximize your profit potential. Remember, technical analysis is all about identifying patterns and probabilities. Fractals provide a powerful lens for looking at the complex dance of the market. Part 6. Writing the fractal wave practical trading applications. So how can you actually use fractals in your trading? One popular approach is the fractal breakout strategy. This strategy involves identifying consolidation zones within fractal patterns and then trading the breakout points. When the price breaks out of a consolidation zone, defined by the fractal highs and lows, it often signals a significant move is underway. You can enter the trade in the direction of the breakout, placing a stop-loss order just below the fractal support or resistance level. Another application is using fractals to identify potential trend reversals. If you see a series of lower highs and lower lows forming a bearish fractal pattern, it could suggest the uptrend is weakening and a potential short selling opportunity. Remember, fractals are just one piece of the puzzle. Always combine them with other forms of analysis and risk management techniques to make informed trading decisions. Part 7. Limits of fractal analysis. Navigating market chaos. While fractals are a powerful tool, it's important to understand their limitations. Financial markets are complex and affected by countless factors, not all of which can be captured by fractal analysis. Market sentiment, economic news, and geopolitical events can all disrupt even the most well-defined fractal patterns. Blindly relying on fractals without considering these outside factors can lead to costly mistakes. Furthermore, identifying fractal patterns in real time can be subjective. What one trader sees as a clear fractal signal, another might interpret differently. It's essential to develop your own understanding of fractal analysis and backtest your strategies thoroughly. Remember, no trading system is perfect. Fractals can improve your success rate, but they don't guarantee profits. Part 8. Fractal Wisdom: Gaining an Edge in Finance. Despite its limitations, understanding fractals can give you a significant advantage in the financial markets. By recognizing the repeating patterns that drive market behavior, you can make smarter trading and investment decisions. Fractals encourage you to look beyond the surface noise and focus on the underlying structure of the market. This long-term perspective can help you avoid emotional trading and stick to your plan, even during volatile periods. Furthermore, fractal analysis can be applied to various financial instruments, including stocks, futures, and currencies. Whether you're a day trader or a long-term investor, incorporating fractals into your analysis can enhance your understanding of market dynamics. Remember, the key is to integrate fractals into a comprehensive approach that combines technical, fundamental, and psychological analysis. Part 9. The Future of Fractals in Finance. As technology advances and our understanding of complex systems grows, fractals have the potential to play an even greater role in finance. Algorithmic trading systems already use fractal analysis to identify trading opportunities and execute trades at lightning-fast speeds. Furthermore, researchers are exploring new ways to apply fractal geometry to risk management, portfolio optimization, and even market forecasting. The potential applications of fractals in finance are vast and still being discovered. By harnessing the power of fractals, we can gain a deeper understanding of the complex workings of the financial markets and unlock new possibilities for profit and growth. Remember, the financial world is constantly evolving. By staying ahead of the curve and embracing innovative approaches like fractal analysis, you can position yourself for success in the ever-changing market landscape.